They're really setting this up here perfectly to bring the system down. It's being dismantled piece by piece by piece. And then there's going to be a climax where the whole thing comes down, and I mean comes down like literally overnight. The stock market could be cut in half in a day, okay? In half in a day. Why? Because everybody runs to the door at the same time.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2024, while supplies last. First, we feature backdated 1-ounce silver Canadian maples at $3.25 over spot. We also have pre-1933 AU $10 gold Liberties at $34 over melt. And finally, we're offering 90% constitutional silver at $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest. Gregory Mannarino, the founder of TradersChoice.net, joins us this Monday, April 22nd, 2024. Greg, thanks for coming back on Liberty and Finance.
Thanks for having me on. Love being here. You know that.
Most of our viewers may know that we met in person at the first Liberty Mastermind Symposium in Las Vegas, Nevada, which was your stomping grounds at the time. Actually, that was the second Liberty Mastermind Symposium. But anyway, now you've relocated to Florida, I understand, as have I. So, as have Miles Franklin CEO Andy Schectman, as has Michael Pinto, that we both are good acquaintances with. So anyway, it's interesting times, and people trying to do what they can to get some freedom while it still can be had, and some privacy, etc. Get away from some taxes. We have a question. A couple of our viewers, we got a lot of questions that were submitted by viewers ahead of your arrival, but several of these have to do with the Fed's repurchase program, the reverse repo program at the Fed, and it's been considered a liquidity fund that's been covering some stresses at the banks, but it's almost gone dry here. As we start out $2.5 trillion, it's down to $400 billion or so recently, or end of last year. We have a question from Kidder3119 says, "Good morning. What is Greg's take on the reverse repo program at the Fed and its decrease from $2.5 trillion to $400 billion in the last year?" Gerald Lee 3123 says, "Does the Fed repo program need to go to zero before the system locks up, or are we waiting for time? I don't know when of a big payment for $10 trillion in bonds for the system to lock up," and so on. So your view of the significance or the potential significance of the reduced liquidity in the reverse repo program.
Okay, well, let's start off with this. What was that program really all about here? It was a trick. It was a way to fool the system into believing that it's more liquid. The system is more liquid than it is. By passing vast amounts of cash back and forth between institutions overnight, okay, the system says, hey, we're a lot more liquid than we think we are. So it was just a scam. I call it a liquidity scam in many views. So I don't believe in coincidences, and I don't think the person that is asking that question, nor yourself, believes in coincidences. What have we witnessed here since the Fed started tapering down this repo program? The expansion of war. This is not a coincidence that at the same time the Fed has been tapering this down, we're now seeing war expand rapidly. So it's just another mechanism. Now we're actually adding liquidity to a system. We were tricking it before, but now we're pulling cash into the now. No other endeavor on this earth creates a bigger need for borrowed dollars than war. So that's why you're seeing this taper down and war expand at the same time. This is not by chance. This is not by coincidence. This is by design. So that's where they're doing it. They're trying to find another avenue, and they're going to be very successful in doing this here. What did we just get? Another $95 billion over the weekend to foster more war here between Israel, Ukraine, and weaponry for Taiwan, of course. That's not going to work out too well. This is just another installment, just like the $369 billion that we got for the the inflation. We had to spend $369 billion to reduce inflation, which it hasn't worked, quite obviously. You and I and everyone that follows our blog knew this was a scam. We're being scammed. We're being scammed on an incredible scale. And not only that, we're being set up. I'm glad that we're doing this today, because you're already getting pushback from Ukraine here. It's not enough. In other words, thank you for the X amount of billion. I think it's 61 billion slated for Ukraine out of the 95 billion. I could be off on those numbers here, but it's not enough. So what's going to happen here is they're going to ask for more cash. There's no doubt about it. And it'll sit around for a while. Then they're going to spring another big show on us, like, the beautiful fireworks in the sky over Israel. And then they'll sell us another lie, another tale. And then we're going to, of course, be forced to fund more. This is just another installment. But going back just to the question, because it's a good one here. Again, I just noticed these kinds of things. Hey, you know what? They are tapering down. What is that all about? Something else has to take place, because they can't just stop doing that. Okay, the system is already illiquid. The system already operates in a perpetual vacuum, a black hole. They had to fill that in. So war, expanding war, more cash for anything they want to spend, blank check. And of course, it's working out exactly how they set it up.
When you mentioned blank check, I thought immediately of the suspension of the debt ceiling following all this. I would call it, crocodile tears and hand wringing and everything for the past year or 2, 3 about, we're going to hit the debt ceiling. We're going to shut down the government. Oh no. And finally they said, from now to the election, we're not going to have a debt ceiling. So it's talk about blank check. Other governments have done different things to try to take postures to defend their currency or try to maintain the sense of trust and faith. The Bank of Japan has been struggling mightily about that for the last 3 years. We have a question from Gerald Lee, 3123. Does the Bank of Japan have to defend the yen? What intervention would they have to make, and what does it mean for the USA and for the dollar?
Well, look, I think everyone that follows our work here should really understand what we're seeing here. This can't stop. It's just going to be relentless. There's going to be more debt piled on here. Look, what are we witnessing? We're witnessing a very interesting phenomenon that is a global economy that is just dead, despite the fact that it's more than dead. I'll tell you how bad this is. In my view, we've already seen a complete collapse of the system, but what they're doing here is trying to fake it or trick it by piling on more debt here, which is devaluing the currency. What are they doing? I mean, what have we spoken about, you and me, right on your own show, how their central banks here are in a race to the bottom. Who can get there first? Who can suck the purchasing power out of their currency first? And unfortunately, it's not going to stop. So I don't know what people think. Do they really believe that there's going to be some kind of intervention to stop this? It's just not going to happen. We are being pushed deliberately in that direction here, while people have no idea what's going on, because you get the mainstream media telling them how great we are, how strong our economy is, how rich everyone is. Yeah, despite the fact that you're working 2 and 3 jobs to make ends meet, you're rich. How about this headline just from today? Look at this. This makes me sick. It really, really does. This is Reuters. How's this headline? You see that? Yeah. A growing number of Americans have seen their savings dwindle. I mean, this is incredible. This is the Fed President Goolsbee. A growing number of Americans have seen their savings dwindle, squeezing their budgets while interest rates stay high. The deterioration of household finances for those earning less than $4,500 is they're getting pushed down to even the lower rung. If the delinquency rate, this is Goolsbee, of consumer loans starts rising, which it is at a staggering pace, that is often a leading indicator that things are about to get worse. Don't take my word for it or yours. Here we have a Fed president who set us up, who's part of it as well, quite obviously. You can't make this stuff up. Try. The truth is always hidden in plain sight. We just got to know where to look for it. You and me, we just kind of take it and we kind of, hey, look, people, this is what you need to be looking at.
I want to key in on one point that you just mentioned there, because I think a lot of people don't interpret it. We're being intentionally misled by the information that we're being given spoon-fed by the mass media. But they say, oh, look, the economy is strong because the numbers, the indicators that we use to track the GDP are going up. But that GDP is going up because of runaway debt issuance and by destruction of the value of the dollar, of course it takes more dollars to do anything. So it looks like, oh, there's more dollars, there's more activity nominally going on in the economy, but at the same time that's not a real increase in real activity or real hard goods or whatever. It's actually just a symptom of the collapsing value of the currency. As you mentioned, people's savings being robbed from them. Any comments on that confusion that it's very common with people when they think of the dollar as something stable, which it's obviously not. None of the fiat currencies are. They're all in free fall. But how that causes a confusion where the powers that be can point to increased numbers, which is really a symptom of destruction of value, but they call it an increase in health, robust economy.
We're going to talk about cash creation out of nothing. So let's put another perspective on this. So vicious cycle. You have the situation here where, let's say the Fed, we'll stick with the Fed, is purposely devaluing their currency, meaning that it's now going to take more of those dollars to buy anything, just like you said. So the cycle is they have to keep creating more and more and more of the currency. And the currency, I think, what people don't understand at all, and it's understandable why that this is confusing to people, is when the Fed makes a dollar, whether it's printed or whether they add digits to a screen, it's not automatically worth a dollar. It has to steal purchasing power from every other existing bill, wherever it may be in the world, whatever it's digital or printed. So that mechanism of going on now by the hundreds of billions, trillions repeated over and over again is sucking the purchasing power out of the currency. I mean, for example, no country has a war chest here. Now, we just found out today, as a matter of fact, that global spending on weaponry and war has now hit an all-time high. Where does this cash come from? No developed nation on earth has a war chest, has to be borrowed into existence. This is massively currency negative. People don't know what's going on because they have no idea how money works, or cash works, how the system works. We're being systematically destroyed. I wrote a whole paper on this. If people subscribe to my free newsletter, basically it's about how we're all losing, how the system is designed that way to create a system, on us that is making us lose. And we really can't win in this kind of situation because we have all of our so-called representatives working not for we the people, but obviously for central banks to foster the situation again. Okay, 369 billion, where's that cash come from? 95 billion, another installment for the war machine. Where's that cash come from? We don't have it. It has to be created out of nothing. And this is obviously a situation here that is very, very dire. And that's why people are in the situation they're in right now. And it's just no way that is going to get better here. It's only going to deteriorate faster from where we are now, period.
In the face of that that destruction of people's earnings and savings and retirements and our financial futures for our children and grandchildren by this trick that's been pulled on all of us, it's unconstitutional, frankly, the fiat currency system that basically debases anything that we do try to save up. You have a cadre of countries in the world that are turning away from that, turning away from fiat currency, and some of them have announced, the BRICS Plus, that they're going to try to come up with some kind of either commodity or precious metals backing for their future currency. We have a question here from Mitch Bromwell, 9554. What percentage of one's portfolio should be dedicated to physical commodities or ETF-backed commodities? So anyway, people wanting to hold on to something that's real rather than just the fiat currency as their savings.
That's a difficult question to answer because everyone's situation is kind of different. But what I would say is, look, if you look at your own kind of a situation, okay, wherever you may be on the scale of however it is. But I mean, I can't imagine, and I'm just going to go back to what I've been saying for 1,000 years, a better place to be than in precious metals here. I don't sell this stuff. I just say it because I believe it's true. Silver is just massively undervalued, second to gold here. So what percentage of your portfolio? A large percentage of your portfolio. In Wall Street terms, you should be overweight, commodities and that you're holding in your pocket. And of course, there's other ways too. Some people are like, well, I don't want to hold it in my pocket. Or, you can do this via an exchange traded fund. But me and you and our fans, we want them to have it in their own hand. People want exposure to other commodities too, like oil, other commodities. There's many ways to gain exposure to that, and I talk about this a lot in my newsletter, which is free. I've put out so many with suggestions of what people should look into, and obviously, make your own decision on this kind of stuff here. But a large portion should be invested, in my opinion, in this here. But realize again, well, what were you doing? When you're holding a hard asset like this, okay, why are you doing this? First of all, these are real assets. They're real money. They've been real money for thousands of years. No central banker is going to tell us that the truth that this is real money, of course, and no banker for that matter. All they want you in is the dollar. That should tell you something, that you need to be overweight metals or commodities. I've been telling people for a while now, commodities, because look, this environment is still risk on, despite the fact that we have an environment right now of extreme risk, according to my own indicator, the Mannarino Market Risk Indicator. We're in a red zone. Okay, market's still doing okay because it believes that more easy money is going to be pumped into it. And this is just going to exacerbate the entire problem. If the market honestly believed, the stock market really believed that the debt market was going to be fueled with much, much, much more debt, and the Fed's going to get in here, and again, to keep rates down, the Fed has to get into the market. They can't just say it. They have no magical powers. They have to buy more debt, and they have to create cash out of thin air to do it. Okay, so that mechanism, I think there's no doubt at all that that's going to happen here for a while. And the situation is going to deteriorate faster because of that as well. But the illusion of the market will be maintained until it's not, until we see that spectacular sell-off in the debt market, which is eventually going to occur, because it's the bubble of bubbles of bubbles. It's Frankenstein, putting pressure on world stock markets, which will melt down. Cash will just move into hard assets, commodities, and I also believe into crypto. Is also artwork, musical instruments, maybe classic cars. Cash doesn't fly away. As we talk, it doesn't go to money heaven with little wings on it. It doesn't do that. It just moves from one reality to another, and that's exactly what's going to happen here.
You're leading us right into this next question, and perhaps you've answered most of it, but you may want to embellish that with this specific question from user NS5GT. As a financial expert, when do you expect the markets to crash? There's a comment already from another viewer, Sebastian, who says, when the 10-year yield goes parabolic. In other words, what signs do you watch for as an expert that tell you we're on the verge of a coming market crash?
I always look at the debt market. It's the key to this entire thing. I've been telling people to watch the debt market for over 10 years. Forget the stock market. The stock market derives value from what's happening in the debt market. If rates are artificially suppressed, which they've been now since the last meltdown, you get distortions of price action. There's no asset today, in my view, that has a real price discovery mechanism behind it. Either they're rigged, artificially suppressed, or again, this risk-on environment has caused cash to come out of places where it should be going into, and vice versa. It's created a minefield on an unprecedented scale. So eventually, I told people it's not hard to do. Focus on what the 10-year yield is doing, because that's the benchmark. Eventually, we are going to see an uncontrolled spike. What do I mean by that? Today, I think the 10-year yield is sitting around 4.65. If we are going to see 20 basis points jump in a day, maybe more than that, in succession, bang, 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 that's going to put enormous pressure on the stock market. So what we're waiting for is we're looking for a sell-off, which is going to happen. It's just no doubt about it. And it's not going to be by chance or by accident. This is, again, another situation that's going to be fostered by central banks who are going to bring the current system to its knees, only to issue in a new system. Okay, so watch the debt market. Watch for an uncontrolled sell-off in the debt market, meaning spiking, bang, 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 higher in the 10-year yield, which will have the absolute reverse effect on the stock market than artificially suppressed rates. Every time that people pay any attention to this whatsoever, just for example, going back to the MMRI, every time we've gotten into a red zone where we are now, red zone meaning extreme risk, it's color coded, and I also have it, extreme risk, low risk, blah, blah, blah. The market hates it here. The market doesn't like it here. I think action is going to be taken to keep these rates down, at least through the presidential selection cycle. That's what I call it. And then we'll see after what happens. But again, they had this, they're really setting this up here perfectly to bring the system down. It's being dismantled piece by piece by piece. And then there's going to be a climax where the whole thing comes down, and comes down like literally overnight. A spiking in an uncontrolled sell-off in the debt market is going to put so much pressure on the stock market. Could be cut in half in a day. Okay, in half in a day. Why? Because everybody runs to the door at the same time. That's what a crash is all about, not a correction or a pullback. A real crash is where everyone runs to the door at the same time, trying to dump their assets, and they'll take anything for it. You as a trader, as a person that's invested in the market, I'll put out a real quick scenario. Let's say, okay, you know what? I see the market selling off. It's kind of, I want to get out. I want to maybe lock in some profit or whatever. I'm going to put XYZ for sale at a market order of X, meaning that's all I'm going to take for it. All of a sudden, your order isn't getting covered, and now you got to lower the price. Oh, no one wants to buy. You got to lower it again, lower it again, lower it again. Then all of a sudden, panic sets in, and you're willing to take anything. So you put in. I'm sorry. So you put in a. That's when you put in a market order. You initially put in an order saying this is what I want. A market order means you're willing to take anything. Okay. And that's what you don't want to do. And that's why you see a precipitous sell-off in anything when people are running for the door at the same time. It's a crazy situation, but it feeds on itself. And that's, we could seriously see, there's no doubt in my mind that we could see the market fall 50% in a day in a full-on meltdown scenario, and people are not going to know what to do with themselves. So you just got to be ready. You got to be ready from every angle.
Different administrations have handled things slightly differently, but there seems to be a lot of similar actions being taken in the Western countries, that is, the non-BRICS countries, for the past decade more or two, as far as devaluing their currency and marching to the beat set by the central banks, the World Bank, etc. Some people wonder, does it even matter who's in the Oval Office? For example, Chris 54321 says, "You have said it doesn't matter who sits behind the Resolute desk. Do you think everything would be the same right now if the other guy had won? The border, Ukraine, Israel, fuel prices, etc. Do you intend to vote this year?" So could you address that topic of people who are well-intentioned, trying to do the right thing for their beloved country, but concerned about whether in fact the president and so on, their elected representatives, actually are the ones that are making the decisions here?
I don't feel that anyone that at least who understands what's going on feels that they have any kind of representation right now. It's not a good thing to feel like that. We feel like, taxation without representation and going back in time here. But we have to think, who runs the world economy? Who runs the world financial system? Who runs the financial markets? Is it our representatives? Is it president, kings, queens, or monarchs? No, it's central banks. They run the show. They're the ones that call the shots here. Would things maybe be different to a certain degree? Maybe, possibly. I'm not sure. But all I know is, if you look at this thing in totality, going back here, has the system really? It's just been deteriorating since central banks took over the system, the purchasing power of the dollar, the debt surging here. Did the other guy, as this person referred to, what did they do to the national debt? He almost spent as much as Obama did. National debt surged much higher here. What was he calling for, the other guy? He was calling for a weaker dollar. Does that help the people? No, it does not. Does it help multinational corporations? It sure does. And they'll get really richer off of that here. It doesn't help the people. He was calling for negative rates. Negative rates and a weaker dollar. How does that help we the people? Negative rates means you pay the bank to keep your cash in there. I mean, you got to be kidding me. I know people live in this kind of a delusion, and they feel like if the other guy won, things would be different. It may be in some aspects, but in the grand scheme of things now, it would be no different here at all. He played right into what the central banks would want. Again, he was spending and spending and spending. The other guy, what were people saying? Oh, well, the other guy is trying to bankrupt the Fed. No, all he was doing was empowering the Fed. The more debt a central bank is allowed to issue or is called on to issue, the stronger they become. No difference. So it's all the same thing. It's a different suit, really, the truth. If people want to believe in that there's someone out there that has their best interest, who has your best interest? You do. And that's all. These are the people here. Look, with regard to how these people play the game, where do they go? Where's the first place? Where did the other guy go recently? I want people to look this up for themselves, looking for support. He went to Wall Street. He went to all the big fat cats on Wall Street. What do you think he said? We're going to make sure your profits come down. We're going to lower your prices. No, he didn't do that. He made promises like, for example, we're going to lower the corporate tax rate. We're going to make sure that the dollar stays weak so you multinationals can make all kinds of money. That's what he did. Okay, you don't know that. People don't know that. But obviously, if someone is going to Wall Street, which they all do, I'm not picking them out of any. They all go to Wall Street because they got, this is a corporate state. That's what we have here. I don't even want to say controlled by the government because the government to me is central banks who run the whole show, as we just said. But that's my take on it.
Before we let you go, remember when we first met, our channel was called Reluctant Preppers, and we talked a lot about physical preparedness. You and I both living in Florida. Florida can be subject to severe weather, including hurricanes. And we have a question from Digger105337 saying, since moving to Florida, have you made any escape plans for the hurricane season?
No, I haven't made any escape plans. I'll just kind of deal with it if I have to at that particular point here. Hopefully we'll be okay. Anything can happen. Look, there's always risk in life. Breathing has risk associated with it. We can't let it scare us to death. So we do it one thing at a time. And thinking ahead, obviously, is super important. Obviously, I don't have a direct plan, but if I had to get out of here, I guess I would.
I know we're grateful that the home that we're living in is a solid concrete block and
this one
stucco
too.
Construction. So that's a nice thing compared to where we came from. One more question. As an alternative asset class, people have been interested in the energy sector. You've been talking about it a lot and how keep your eye on not just the 10-year yield, but also on oil because it's the darling of the military, industrial / petroleum complex. The question is, do you still have any positions left in the energy sector?
Not specifically, but I'm invested in things that would be included in a basket of things. So no, not at this time. But I think I'm very bullish on energy. I've been telling people for the longest time for multiple reasons. You got this stuff is priced in dollars. That's number one. Number two is we are going to face, unfortunately, and they're setting this up too, a resource problem and a scarcity of things, and partly some of that is going to be energy. We'll see. Look, I'm always moving cash around places, and if I do something like that, believe me, I'll tell people about it right in my newsletter. So do subscribe; it's 100% free, or on my blog. Everyone knows what I'm doing, how I'm doing it. I'm an open book. I tell everyone what I'm doing when I'm doing it. So that's what I can say. I can't tell people what they should do. I want people to look into that, but I can tell people what I am doing, and then we'll take it from there.
So, folks, if you don't want to miss out on any of Greg's latest thoughts, make sure you do sign up for his newsletter. He'll send out at least 2 emails per day with your latest market before market open and after market close thoughts, sometimes even a midday update if something really big happens. And that's at traderschoice.net, if I'm not mistaken, where people can get signed up for that. And if you don't want to miss a single interview with Greg on Liberty and Finance, make sure you go to libertyandfinance.com. Just put in your email address, click submit, make sure you confirm on the confirming email. You'll get 1 email in your inbox per day with our latest interview, and you won't miss a single interview with Greg that way. And Greg, on behalf of all of our viewers, thanks again for being here with us on Liberty and Finance.
Thanks for having me, as always.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2024, while supplies last. First, we feature backdated 1-ounce silver Canadian maples at $3.25 over spot. We also have pre-1933 AU $10 gold Liberties at $34 over melt. And finally, we're offering 90% constitutional silver at $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.